Hello everyone, and thank you for joining us for our session today on the secrets to mastering the ever-changing sales tax landscape. Joining us today is Stacy Dose from Avalara. And before I pass it over to Stacy, I would like to remind you that this session is being recorded and it will be posted to our on-demand webinar library later this week for you to review and share with anyone. And if you do have any questions, please feel free to type them into the questions box and we will get them answered at the end of the session. And now I will pass it on to Stacy to kick off our presentation.
Great, thank you, Angie. Thank you to Innovia for having us, and thank you to all the people attending and for spending some time with me this morning to talk about sales tax, which, by the way, can seem like a landslide lately, so you weren't too far off base, Angie. So real quick, my name is Stacy Dozy. I'm a Strategic Alliance Manager here at Avalara. I do want to just talk to you today about a couple of things related to sales tax, and hopefully we can answer some of your questions. And of course, at the end, you can type them in the box and we can answer them then. So we'll do a quick overview of South Dakota v. Wayfair. That's one of the main reasons that we have such a changing landscape going on right now. So that's one thing we'll talk about. We're going to talk about the complexities of sales tax in general. And then I want to talk specifically about some industries, some industry challenges, and that might be some things that people don't know are happening in different industries. And we'll do a quick overview of our Avalara solution and then some time for Q&A. And if all goes well, we'll get you out of here a little bit early, so that should be okay. So let's talk first about South Dakota v. Wayfair. So this was, sorry, I'm going to move these slides. Sorry about that. So what is South Dakota v. Wayfair? This happened last year, last June of 2018, and essentially there was some talk going around in the court systems for quite a long time because South Dakota went to court with Wayfair talking about whether or not they should have to pay sales tax into the state of South Dakota on their transactions. And the reason being, South Dakota was saying, you're selling into our state, to our members in our state, and thereby we think that you should have to collect and remit sales tax into our state. And Wayfair was fighting that because there was no physical presence. And previously there was a ruling, Quill v. North Dakota, that was back in 1992 that kind of set the standard for a physical presence rule. And so that Quill v. North Dakota said, if you have a brick and mortar building in a state, you have a physical presence in that state, and you should collect and remit sales tax. So basically, when South Dakota ruled on June 21st, when the Supreme Court ruled in favor of South Dakota on June 21st, they essentially said physical presence is no longer the only reason for having nexus in a state. It's no longer the predominant reason for having nexus. There now is this idea of economic nexus, meaning you now have an economic presence in that state. So that's kind of what happened on June 21st. The Supreme Court ruled in favor of South Dakota on this. So who's affected? Really anybody selling remotely. This obviously affects anybody who has an e-com site, anything like that. But even if you're taking phone orders, or if you have people delivering into a state, or you have remote salespeople, anytime that you're selling into a state, you now could be deemed to have an economic presence in that state. And South Dakota has said that that economic presence will come into effect when you have annual sales in excess of 100,000 transactions or 200 or more transactions. So those are the thresholds in South Dakota. And that became effective on November 1st of last year. So although the ruling was June 21st, South Dakota kind of put their stuff in order and decided what their thresholds would be and made it effective for anybody selling into South Dakota as of November 1st in 2018. So what's happened quickly, many states have fallen in line right behind South Dakota. They said, they kind of did the whole Me Too thing, and they said, yeah, we have economic thresholds as well in our states. And so this map is showing you a little bit about all of the states that do have some sort of economic nexus threshold on their books. It talks a little bit about, it's a busy map. I'm going to give you some resources later so you don't have to digest this map too much. Maybe you've seen this or something like it. But basically, it is telling you that all of these different states have, economics nexus coming into play on either the dates that are behind us or in front of us. My blackout is a little bit behind, so February 1st has obviously come and gone. So Wyoming now has economic nexus thresholds. The thing to keep in mind here is that all the thresholds are generally different. So where South Dakota was $100,000 or 200 transactions, some states can be both. You need to have both. Some can be $250,000. So they're all over the place. These states are not being really consistent in what they're doing in terms of what their economic thresholds are. The other thing that's very important to know is that some of these states, I believe 18 of the states that have economic nexus, also are taking into account gross sales. And this matters to our wholesale distributors, because this is not just something for retailers to take into account. In order to meet those thresholds, it's taking into account gross sales in many of those states, which means that you may still have sales into those states that are exempt, but you still may have to register and file a $0 return and then prove that you don't have to collect tax in that state. Just a couple of other things that people have asked over time about this ruling. If I'm already registered in South Dakota, does this court decision apply to me? I mean, essentially, if you're already registered, you're already collecting, so nothing would really have changed. As I mentioned earlier, it's not only online transactions, it's really about anybody selling into a state. So phone sales, like I said, remote sales, anything like that. And does economic nexus rule apply to non-taxable transactions? So again, this ruling doesn't change what is or is not taxable in a state. It simply is saying that now you may have nexus, which is the obligation to collect and remit tax in a state based on your economic dealings in that state. So it doesn't change what items are taxed or what is not taxed. So keep in mind, like I mentioned earlier, there was this idea of physical presence. That has not gone away. Physical presence is still something that triggers nexus. Now we've added this whole idea of economic nexus, but I also don't want people to only think in terms of these two things. There are other things that businesses do that can trigger nexus for them in a given state. So this is just a list of some of these things: attending trade shows in certain states, having third-party carriers can cause you to have nexus in states. So just keep in mind that there are a lot of different activities that your business could be engaged in that could cause you to have nexus in states. So economic nexus is just the newest of those that has come out. And then, like I said, there were some resources. Again, I know this is not the easiest to read, but we do have tools available on our website. I encourage you, even if you just want to search Avalara and Wayfair, you'll find this. We have that map grid that was up there earlier is being updated all of the time. There's also a column sheet that shows you all of the states, which ones have economic nexus, what their thresholds are, what the effective dates are. And so all of that is available for you on the website if you need some additional information, or you can certainly contact your CPA firm and see if they have information on it. But you should be able to find all of that information as well. And then on the right-hand side, if you do find that you end up having nexus in a lot of different states and you need to start registering, we do have a business license registration product available that you can actually go online and start helping you register in those states. So that's just something to keep in mind of. And again, if you need these resources, I can make them available to you. So, you know, that is one of the newest complexities that have happened with sales tax. I mean, it's something that's been really big in the state of sales tax. Many businesses have heard about it. It's changed what they've had to do in terms of compliance. But let's just talk a little bit about, you know, what has been in place before and maybe why this came about. So the biggest thing that I want to point out on this pie chart is really on the right-hand side. Is that really, you know, many states are relying on huge dollar amounts to come into their state based on transactional sales tax. So 47% of total state revenue comes from transactional sales tax. And so that's a huge dollar amount that states are looking to put into their programs and their education and their funding. And so as people were starting to buy online and they quit going down the street and paying tax to their local jurisdictions and started buying at Wayfair and Amazon and Etsy, you know, they quit paying sales tax to their local state. So states were losing about $13 billion because of these e-commerce sales. So that's really kind of, you know, I won't say it's exactly why Wayfair happened, but I mean, you can kind of understand why it was such a big deal, because a lot of states were losing a lot of money because of people buying online. What we thought was just nice and easy and simple. And occasionally we would get sucked in by the, hey, you don't have to pay any sales tax ad when you bought online. It was just nice and easy, but our states were suffering. So what does this mean to businesses? I mean, basically businesses are paying a lot of dollars to manage their sales tax in-house. This is a study that was done by the Aberdeen Group. I know it's quite a range, but you can see here small businesses are paying on average about $63,000, large businesses almost $400,000 to manage their sales and use tax in-house. That's researching rates, making sure their systems were up to date, managing tax notices, doing returns and filing. That's a lot of money that companies are spending to manage their sales tax compliance. And the reason I want to show this is because the next slide, based on an additional study that was done, that is telling you that even though companies were spending all of this money on being compliant with sales tax, 75% of finance and business professionals were saying they thought auditors were likely to find a mistake. So that brings a high amount of risk along with that high dollar amount that you're spending. So companies are spending a lot of money and still have a high amount of risk associated with their sales tax compliance. And as many of you know, compliance is not something that you get to do for fun. You don't get a reward for doing it right. It's actually something that can be quite damaging and detrimental if you do it wrong or you don't do it at all. So, like this says, any effort spent on sales and use tax compliance and related activities are non-revenue generating. They're not the core part of your business. They're taken away from the things that you do, and there can be huge fines and penalties associated with doing it incorrectly. So when we talk about spending $63,000 to manage your sales and use tax compliance and having 75% likelihood that an auditor will find a mistake, well, companies are then also finding that audits are costing over $50,000. And so that's, the time of your employees to do that audit, to spend time with the auditor running and grabbing materials, paying the back taxes, and of course, all the penalties and interest associated with all of that. And this is on one single audit that could happen. So keep in mind, once you get audited by your state, and if you have what's deemed a successful audit by the state, unsuccessful by your standards, you're likely going to go into a cycle and probably have another one within about 3 years. Additionally, auditors like to share information. So they may share that information with other states to say, hey, by the way, I don't know if you've looked at this, but this company over here is working in your state. I mean, auditors will do that. It's kind of sneaky, but they do that. So this is the cost of one single audit. And hopefully none of you have had that bad of an experience, but it's something to really think about because that's just how that risk compounds. So when we talk about sales tax compliance, and I really like to stress the word compliance because it's really what does it mean for you to be fully compliant with your states. Many people think just about the rates. What rate am I charging on these invoices and what rate am I submitting? But there are so many other things associated with sales tax compliance. There's understanding where you have nexus. Where are you obligated to collect? What products are taxable in each state? It's going to be different state by state. What is the right rate by jurisdiction? I've heard of some companies that just actually choose one rate for a state and they just smooth it over every transaction and they decide to, so to speak, eat the difference. So if you look at, there's an area in Denver, I won't go into that chart on this presentation, but there's an area in Denver where there can be a 3% swing in a tax rate just down the block. And so that's a lot of tax that is either being overcharged and overcollected, which is not okay by the state standard, or else that a company is paying for just because they've decided to just choose one rate in the state versus understanding exactly what rate I need to charge for each address. Managing exemption certificates, we'll talk more about that, but that's a huge part of being compliant. You are obligated to make sure that you have those, that they're valid, and that you can present them when needed. Of course, taking care of filings, both your state and local returns, are you doing these monthly, quarterly, annually? Who's taking care of these forms to make sure they get filed and done properly and at the right time? And then, of course, audit readiness is part of that compliance. When an auditor comes in, making sure that you can get them all of the information that they need. So there's a lot of things that kind of go around that circle of tax compliance and what it means to be truly compliant with your sales tax. So let's just take a little break, and I just want to talk about, just some scenarios that people talk about. If you bought a forklift for your warehouse, do you pay sales tax? And you can see here there's two scenarios. It's taxable on the right-hand side if it's used in a warehouse to move finished goods, but it's not taxable if it's used in a production setting. So very different scenarios. And the reality here is this really something that you want to spend your time on and think about? Is this something that your users would know? I mean, I know I was a controller at one point in time. I would have never known this kind of thing. So it's just one of those many things. This comes in the product taxability realm of things. So let's talk about specifically a couple of industries. And I don't know the breakout of who all we have on the call specifically, but let's talk a little bit about some of the industries and what different challenges some industries may find. So retail and e-com, this is pretty easy, right? I mean, this is what most people think of when they think of sales tax. What's being charged for a given product on a given transaction. The problem and the complexity that's happening with retail and e-commerce people right now is just the fact that this whole idea of economic nexus and Wayfair, South Dakota v. Wayfair, that more and more states are passing laws which require them to collect and remit sales tax. And it's becoming more and more complex. So not only, now you have to think about which states do you have nexus in and do I have to collect in that state, but then what are the rates in that state? How do I set that up? And now I got to think about all of the people that I'm charging in that state. Additionally, e-commerce sales have jumped about 200% from 2010 to 2017. So that's a huge jump in those sales, and that's why a lot of these laws are changing and that people are finding new ways to put tax on transactions like retail and e-com transactions. Excuse me. And then you have people who are working in multi-channels or what we call omni-channels. And the big thing here is just making sure that when you have multiple systems that you're using, you may have your back office ERP system, you may have a point of sale, you may have a shopping cart. How are you maintaining all of the same information in all of those systems? Are you maintaining tax rates across all of these so you have one source of the truth for your customer? I mean, you don't want to have them in a shopping cart and have it show zero tax, but then when you present an invoice, now there's tax and they're surprised, or the tax rates are different. So now you're having to really maintain tax rates and tax calculations across all of these products. And that can be very, very cumbersome depending upon how many different places people are having to do that. And so it's really making sure that all of your different products and all of your different platforms are really making sure that tax is being done correctly for the same customer in all of those different platforms. So that becomes a real challenge for customers when they're looking at all of these different platforms and cross-channel selling. Then of course we have some challenges with third-party logistics too. So just having product in somebody's warehouse can give you nexus. There were several mom and pop shops that maybe started doing fulfillment by Amazon that really found out the hard way that once you do fulfillment by Amazon and you have your product in their warehouse, you may now have nexus in the states where those warehouses are located. You don't know where that product is going to be and which of their, at that time, maybe 7 or 10 warehouses it was going to be. But if you had product there, you now had nexus in that state. So understanding, if you have product in a partner's warehouse, does that give you nexus in that state? And then there are, of course, complexities in drop shipping, which we're going to talk about in a little bit. But so there are challenges for retailers in kind of doing some of that third-party logistics as well. So I want to talk about manufacturing. This is kind of one of the hidden pieces that people don't think of, because contrasting it from retail, which is very easy, of course people know they're collecting sales tax. We have a lot of manufacturers who say, I don't have to collect sales tax. It's really not something I have to worry about. But manufacturers are actually a top industry targeted for sales tax. And, according to that Peisner-Johnson study in 2017, some of the issues that auditors found most often were issues with tracking and reporting use tax. So that's a big problem for manufacturers, but also missing or incorrect exemption certificates. Those exemption certificates can be very huge and play a large part in what happens with sales tax compliance for manufacturers. So 70% of US customers are already purchasing directly from manufacturers. And so it's not always just business as usual. The processes that are complicated, they're experiencing more direct to consumer activity. So they have to think about when their processes change from selling directly to a distributor to selling to a customer, are they prepared for that? And have they now done the right steps when they start moving to that type of business? Or are they failing to remit in states where that's now affected for them? So they need to really think about what happens when they start selling direct to customers, because some people just kind of, that happens so seamlessly for some of these customers or partners that they forget about it. So a couple of things to think about, again, specifically for manufacturers is, understanding taxability intricacies. you know, a couple of other things here. Drop shipping. I'm going to talk about drop shipping in a minute. I know I brought this up a couple times, but we do want to talk about drop shipping because it's so important things there. But also all the different things related to manufacturing challenges here, product taxability, handling e-commerce. These are all some challenges also associated with manufacturing. But I want to hop to this next slide because this really, for me, sums it up with manufacturers. But most of my sales are exempt, so I don't have a sales tax product. But a couple of things to think about is the time and effort that you're going to spend on that burden. And it's not really about collecting tax, but proving why you don't. So let's just take an example here. If I have an auditor in a state who's auditing a retail business, you may have a state who failed to change their tax rate when it changed in July. Maybe it moved from 6.9% to 7%. So if they go find that, they're going to collect a 0.1% difference on some transactions. So that's okay. I mean, they're going to look for that. But auditors, what they're really looking for, like I said, are those $0 tax transactions. Because if they can go in and they can find where somebody either isn't collecting tax and they should, or they have invalid exemption certificates that don't prove that they shouldn't be collecting them, they can actually then recoup the entire rate for all of those transactions. So if you think of the difference on a 0.1% transaction versus an entire 7% transaction, and then take that over anywhere from 3 to 10 year look back period, manufacturers are really a gold mine for auditors because there's a lot more potential and there's bigger revenue coming into the state when they do that. So, you know, distributors need to show, you know, what rate they're doing, what rate they're collecting, and if that they're collecting the right rate. But manufacturers have to prove that why they're not collecting anything at all. So that's a huge target. And those exemption certificates can be just like missing a check. Exemption certificates expire in some states, so you need to make sure that you're on top of getting new ones on a timely fashion. They need to be validated in some cases. So there might be an instance where a company is acquired by another company and that certificate becomes invalid once the company name changes. So those are all things that have to be considered with managing these exemption certificates. And so just another saying here, exemption certificates are the same thing as cash money. And we just talked about that. So it's a huge deal. So I've mentioned it a couple times. I want to talk about drop shipping. And so I want to give you a scenario for drop shipping. So, and this can cause, you know, a lot of discussions. I'm going to tell you first and foremost, I'm not an expert on this, but I'm going to give you a scenario. If there are additional questions, we can get, you know, to another a resource for you to ask additional questions, because I know this gets very complicated. And we also do have a video on YouTube that talks a little bit about drop shipping. But suppose a seller is drop shipping to a state where they do not have nexus, but the drop shipper does have nexus in that state. So now you've got the seller does not have nexus. They have no obligation to remit tax in that state, but the drop shipper who's actually physically drop shipping the product does. The seller invoices the product to the customer and does not charge sales tax. The drop shipper delivers the product and incurs a tax liability since they have nexus. Since the drop shipper had the tax liability, how does that transaction get settled? So you have to think, oops, sorry, I did not mean to go past that. Sorry about that. You know, in this case, the drop shipper, you know, they have to invoice the seller or the tax, you know, so that they can remit it. Otherwise, they're going to have to eat it. And as an alternative to eating the tax, the seller may want to just register in that state, and then they can actually pass the burden on to the customer. So there is a challenge here with who has nexus in which state and where the product is going. And it's not easy. Every state is going to be different. You know, the drop shippers that you're using, you oftentimes aren't going to know if the person who's drop shipping the product has nexus in the state that you're selling into. So this is not an easy cut and dry scenario. And oftentimes we have found people that just have made the decision to just register in that state as well, because then they're just passing that on to the buyer, which is where it should be, or to the customer. So that's just a quick scenario on why drop shipping can be a challenge, and why those exemption certificates matter, because the state doesn't necessarily care. The state just wants their money. We kind of talked about this, you know, again, some tax pains and triggers for manufacturing, tracking exemptions, creating nexus. When do you have nexus in a given state? Going direct to consumer, we talked about that. So if you start selling direct to customer, and, you know, again, that kind of sometimes can become a very small process where people don't really think about it. Next thing you know, it's exploding and you're selling quite a bit to customers. So these are all things to just think about if you're in a manufacturing industry and things that you may be dealing with. So I want to move on to software. I don't know, software is kind of a, I won't say a niche industry, but I don't know if anybody on the call is in the software business, but it's an interesting industry because software, like it says here, companies trigger 9 new sales tax obligation in a given year. This is one of the things that changes quite often in many, many states. So states are always changing the way and which products are taxed in a state. So, you know, it used to be very common that software came to you in a hard platform. It came to you on disks, and it came to you on floppy disks or hard disks, and some platform like that. It got mailed to you or hand delivered to you. And so when things started coming over the internet, it became downloadable. You know, that wasn't taxed initially at first. And so now that's changing over the years, and it's really caused a lot of new tax laws to come into effect. It's caused companies that have had to do a lot of additional work to manage this and to figure out what is taxed. On top of that, I'm actually going to flip to this next grid, and again, it's a busy state map. I apologize. I'll make all of these available to you if you need them. But this just shows some of the complexity, because you have some of the differences not only in the software itself, but also in services that relate to the software. Some states have differences when you have services as part of the installation of software may or may not be taxable, as opposed to services after the fact of the software. Also, you have maintenance on software. And so these are all things that can be different in any given state in terms of if it's canned or if it's downloaded, and if you have services associated with it, and how all of the states are tracking that. And so it can be very, very complex, and it's constantly changing. This is something that is changing. Like it said, 9 new rules in any given year for sales tax, or for software on sales tax. So just something to think about there. Consumer use tax is another really tough area. It's one that, again, is not really cut and dry. It can be very tricky, and it can be poorly understood by many businesses. But companies that ignore the issue or manage it insufficiently can really suffer some great risks with that. So all states are looking to expand existing revenue sources, especially in the area of consumer use tax. And so when auditors come in, they're going to be looking for those things. You know, what products did you bring in and not pay tax on? You know, but now you've used them, you know, for your own use versus using them for your manufacturing site, for example. So most accounting solutions and ERPs cannot effectively automate this consumer use tax calculation. So it's something that's very, very manual. It's something that's very error prone, and the dangers of getting it wrong can be really high. So again, it's one of those things that auditors are looking at to make sure that you're paying the proper taxes on those products as well. So just some things to think about here. We do have integrations right now with NetSuite and GP. I realize that most of you guys are probably on NAV or NAV prospects. We do have additional functionality that we can look at. But a lot of this too, just keep in mind, is really just in terms of tagging transactions, because there's no real way or automation in an ERP system to know. ERPs aren't smart enough to know what products you're using versus what products are going towards, you know, your production, for example. So it's really a manual tag a line. So it's just something to really think about within your business is, how are you tracking use tax? Are you able to look back at your AP invoices and say, this many of this product I now have to pay use tax on? So just something to keep in mind with the use tax piece of it. I'll do another quick mental break here. Distributor wants to get their windows cleaned on their buildings. Is this service taxable? So janitorial services are taxable, so cleaning the inside of windows is taxable. But commercial services are non-taxable, so cleaning the outside of windows is exempt. That's kind of backwards. It's kind of weird. You could spend some time trying to think about, you know, what does this really mean and who's paying tax on what? Because I know we used, you know, both janitorial services on commercial services and inside and outside windows. But there was actually a customer that actually went through this scenario. They had to determine this service was or was not taxable for their business, and they paid some fines and are happily using some third-party tax solution software like Avalara, for example. So just some things to think about with that. So let's talk briefly about Avalara and the solution that we have for you to help you maintain these complexities. First of all, I do want to point out that we did start in 2004. We started in the Microsoft space. Great GP or Great Plains was our first connector, but we've been very heavily tied to the Microsoft space and work very closely with Microsoft on all of their connectors, their NAV, their D365. We currently have over 20,000 active customers. And really, one of the things that I want to point out about that is our churn rate is very, very low. Once customers come on to a tax automation solution, they really find that it's in their best interest to stay on that solution. They're finding that they have less work to do with that compliance piece. They're not having to manage their tax notices. They're not having to look at tax rates anymore. And so it's kind of like outsourcing your payroll. It's one of those things that you can just wipe your hands of and you no longer have to look at. And that really matters because your company has more important things to do than to worry about sales tax automation. We do have over 700 pre-built connectors. We've talked about the Microsoft family. But the thing that this means to you is when we talked about the omni-channel and selling with different platforms, we really connect with over 700 different products. And so as your business grows and expands, and whether you're adding a new ERP or POS system or changing an ERP, you don't have to change your sales tax solution. We can grow and expand with you, and you'll always have your one source of the truth when it comes to sales tax rates. So we can connect to all of those different platforms, your POS, your e-com, your ERP, and it's going to give you the same tax rate across all of those transactions, and that's very important to you. And the rest of it is just some transactional information that you can choose to read if you not, but it just talks about the level of transactions that we manage for all of our customers and the growth that we've really shown over the years, because we want to make sure that our customers are finding, you know, rapid transaction results and great accuracy. So with that solution, we actually have 3 products. We have our AvaTax, which is our tax calculation piece. That piece is the one that snaps directly, you know, it looks into your ERPs or your POS or all of your platforms, and it does the actual tax rate calculation itself. It's going to look at your settings in our portal, and it's going to ask 3 questions when it does a transaction. Do you have nexus in this state, yes or no? Is that product taxable? And if so, at what rate? And is this customer exempt? And if everything comes back where it needs to return a tax rate, it'll return a rate based on your settings, and it'll do all of that in about 0.4 of a second. And it's going to look at our matrix of items and tax logic that our team works on feverishly day and night to kind of manage all the rates across the states for all of the products. And it's going to make sure that we're giving you the right rate for the right product at the exact right location. So we didn't talk about that in too much detail, but I did talk about jurisdictional assignments. We are using a latitude, longitude to make sure that we're getting you the right rate for that specific rooftop location. And that really does matter to get you the right rate for that transaction. We also do have a piece called Cert Capture, which manages exemption certificates. So that's a really huge piece for anybody who says the kind of, well, we don't have to collect tax, but you do have to prove why. And so there was a study, I don't have that slide in this deck, but we did some studies of some people that went through an analysis on their business. And we had some companies that were initially collecting about 100 exemption certificates. And after they did some analysis on their business, they ended up needing to collect actually over 700. And so they were way under collecting, and they had a huge risk associated with that. And so making sure that you're collecting all of the right documents that cover the right states and that they're all valid can be very important to you, especially if an auditor comes knocking on your door or sends you a letter. So managing those is a huge piece. Those exemption certificates can automatically integrate with AvaTax, the tax calculation piece, so that as part of that, you know, that analysis where I said it'll ask if the product is taxable and if the customer is exempt, it can look at Cert Capture and determine that for you. And then, of course, we can do returns and filing for you. So as companies are finding that they have nexus in more and more states, you know, with this new South Dakota v. Wayfair, and now they have nexus in maybe 10, 12, 15, 20 states because of it, filing can become a real challenge. Now they're having to look at filing schedules. When do I have to file in each of these states? What does their form look like? How do I get their form? The California form itself is 9 pages. So if that becomes too cumbersome or burdensome for your company, we do have a solution that can do returns for you, where you can go in and validate the information and say approve, and we'll go ahead and take care of filing the returns on your behalf and taking care of those tax notices in case your schedule changes. And so that's an overview of the solution. I can certainly answer more questions if you have that. I want to just kind of leave you with some of our customers that we have. So, I mean, you know, nothing speaks more highly to us than the customers that we have and that we retain. We have them in all different industries, and so that's part of what this is showing. It may not have the industry that you're in, but we also can provide references if there's something that you need. But we're very proud of our customers, and so I just wanted to share this with you. And then I'm going to hand it back over to Angie and see if we have any questions.
Hi, Stacy. Yes, we do have a few questions. Let me pull those up real quick. All right, the first question that we have is, do I have to change any of my current ERP processes to use Avalara?
No, actually, we actually hope it'll be a little bit easier, if nothing else, because your process in terms of entering your transactions will stay exactly the same, and the tax rate and the tax calculation will be done by us. And so it's actually easier in that you no longer have to update rates in your ERP, and you don't have to make sure that those rates are being updated at the right time. So you might get the notice in June that a rate is changing in July. You don't have to hold on to that and change it later. So we're hoping, if anything else, it gets easier.
Okay, thank you. And then the other question that we have is, what are some of the benefits for a manufacturer to use any or all of Avalara's products?
Yeah, I mean, the biggest thing is, well, a couple of things. So the exemption certificate management can be really huge. The cert capture is a really huge piece for manufacturers because, like I said, oftentimes they just don't really understand or maybe don't realize how many they should be collecting, and just the validation of them themselves. The cert capture tool itself can actually do it, remind companies of when an exemption certificate expires, so you can get notification that, hey, you have 5 certificates expiring this month, you should go get new ones. So that is very useful. As far as the AvaTax and the calculation piece itself, like I said, many states with these economic thresholds are finding out that the thresholds are on gross sales. So many states are having to still track transactional information. They're still having to remit a return to a state. And so having AvaTax, which is keeping all of the information, the transactional volumes, even though the tax rate is 0, it's still adding all that information so that you have it handy and you can file your returns. But also, we have a really cool heat map as part of our customer portal that can tell customers when they have Nexus in a state and when they're approaching a Nexus threshold. So as companies are doing business, they may be collecting and remitting in 2 states. But we have this heat map that's going to show them if they have approaching Nexus coming up in maybe 2 more states. And so they may need to go out and register in those states and then later file. And then again, of course, we can help and file those returns for anybody who needs that.
All right. Those are all the questions that we have for today. Please feel free to contact us or the team at Avalara with any additional questions that you may have. And I just want to thank everyone for attending today, and thank you to Stacy for presenting. And to everyone that are watching on demand, thank you for joining us. And we do have a few more webinars coming soon. Tomorrow, March 6th, we have Mark Hamblin from InsightWorks. He's going to be presenting on Business Central apps for distribution and manufacturing. And then we have Jeff Pergolski from Innovia Consulting. He will be presenting on Pick the Wrong Cloud, What Now? And that webinar will be on Thursday, March 7th. And we do have Focus coming up in Houston, Texas. Focus is a 2-day deep dive training event to help you get a deeper understanding of your Microsoft Dynamics Nav, Power BI, and Business Central systems. To learn more about Focus and to get all the details for this conference, you can visit our conference page on our website. That's innovia.com/conferences. So if you're interested in registering for that, please register. And then we have our annual customer conference coming up in April in the Wisconsin Dells. And Avalara will be there, so you can meet Stacy and Megan. Contact your rep or visit our conference page where it will have all the details of our conference. This is a free event to attend. We would love to have you. Register now. Hotel rooms are going fast. So thank you again for joining us, and we look forward to seeing you again soon on another Innovia webinar. Have a great day, everyone.